Hi friends, this LOS basically deals with defining and differentiating between an operating income and a non-operating income component from an income statement perspective. So let us first look at what are operating transactions. Now operating transactions are those transactions which are related to normal business transaction, and hence any income generated out of these transactions would be called operating income. So let me give an example. If you are a company which basically makes auto components, then any sale of auto components or manufacturing of auto components would then be classified as an operating activity, and the sale of auto component would then be classified as operating income. The next piece is non-operating transaction. Now these are the transactions which are not related to the normal business operation but relates to either financing or investing activity. For an example, you borrow money and you pay interest. Now that's a financing activity and hence a non-operating expense. Similarly, if you invest into bonds and shares and you are able to get an interest income or a dividend income, that would be an investing activity and hence would be classified as a non-operating transaction, and income or loss would be non-operating income or loss. Let us see some more examples of operating and non-operating income. Let us see that the investment incomes or any gain and losses from a sale of security would be classified as what? Now this would be an investment income and hence would be non-operating in nature from a manufacturing firm perspective. Similarly, an interest as an expense or interest as an income are basically part of your capital structure of the company and are not related to business operations, and hence these will also be called as non-operating in nature. Now one should know that this capital structure is nothing but your ratio of debt and equity of the firm. Now, however, when you're classifying an activity as an operating or non-operating, it basically deals with the nature of the firm. For example, an investment and an interest expense or an income is a non-operating item for a manufacturing firm, but in case a firm is a financing firm, both investment income and interest expense will be part of operating activity. So the expense itself does not decide whether it's an operating or non-operating. The activity of the company which is classifying will define a particular transaction as operating or non-operating. That's a very critical aspect. Just to summarize this concept, let us take an example of an auto component manufacturer firm. Now this firm has got three income heads. Now one would be a sale of auto component. The second is sale of scrap. Third is rent income. Now one asks you to classify these three income sources into operating and non-operating. The first one is a very simple one, which is an operating income. Now the second one, there could be a debate whether scrap generation is an operating or non-operating. Now one should be clear that the scrap is getting generated because the company is manufacturing auto components, and hence it is also part of operations, and hence it's an operating income. Now rent, is the firm into renting? No, it's not, because it's got a spare space. It has rented a particular warehouse and hence rent income is getting generated, and this is not its normal operation, and hence this income would be classified as non-operating income. So this is the way how we define an operating income and a non-operating income. Now this is very critical, because whenever we do valuation, we assume your operating income to be recurring in nature, while your non-operating is generally non-recurring in nature. So hence it's very important from an analyst to be very clear about operating income and non-operating income.